Howard, you can also see the slides.
Yes, you can see it. I can see the welcome speaker page.
Oh, perfect. That's what we want to be on. So
That's okay.
today we have Howard Burkauer. We're very excited to have Howard speaking again on the Restaurant Revitalization Fund. Howard is a trusted corporate advisor to businesses of all types, from startups to seasoned companies. And Howard builds long-term client relationships by listening to his clients to understand their goals and delivering creative and practical advice. So with that, I will turn it over to Howard to begin.
Thank you very much, Dawn. I'm happy to be here today to talk about some developments that have occurred with respect to the restaurant revitalization program. My firm requires me to say that this presentation is for informational purposes only and not offered as legal advice regarding any particular matter. My views expressed may not be reflective of anyone else, including the firm or its lawyers or clients. But with that in mind, if we just go to the next slide, there have been some developments since the last time we spoke, as the SBA is trying to kick off the for the Restaurant Revitalization Fund. Over the weekend and on a Monday, they've issued a guide and some other materials that discusses how they think they're going to have it work. And I think that one of the really important things to keep in mind is that, unlike the PPP program, where applications were routed through large banking institutions and other participating financial institutions, the Restaurant Revitalization Fund is going to be administered directly and essentially solely by the SBA. And I think that there likely will be a lot of hiccups along the way, as evidenced by the Shuttered Live Venue program, which got kicked off on April 8th and shut down almost immediately, and no applications were accepted or being able to be processed. And they're still working on fixing that. As of right now, one of my colleagues are working on a revised client alert covering some of the issues or matters that the SBA has given guidance on with regard to the restaurant revitalization program. And that client alert should be available later today. And I will work with Dawn to make that alert available, or to turn them into sort of updated slides, so that you can have that to look at in addition to other materials when you vet this program to see if your eating establishment can qualify. There have been a couple of articles in the newspaper that talk about how, although $28.6 billion is a lot of money that's been set aside for grants, these are tax-free grants, that based on running some numbers, the fund would need to be in excess of $120 billion to basically cover the need of all restaurants and related eating establishments that would likely qualify for a grant. But for some set-asides and some priorities, which will get vetted by the SBA on a first-come, first-served basis, remaining funds will also get vetted on a first-come, first-served basis. So I think it's really important for people to be focusing on what they can do now as they await for further guidance, and for the SBA to announce when they're going to basically start the program. One other bit of information that came out in a recent article in the New York Times is that it's anticipated that This particular program, the Restaurant Revitalization um, program, fund program, will start out with a 7-day sort of test period. In my thinking, and again, this is just my thinking, um, my information I've read is that they're hoping to launch the shuttered venue grant program probably sometime next week. So I would suspect that if I had to guess, I think we're looking at this particular program for restaurants might kick off, at the end of the month or early next month. But having said that, I think it's imperative for all qualifying eating establishments to be very, very judicious with their time and use the time well now so that they position themselves to be able to file an application as soon as possible. Um, and what I'd like to do is go over the basic tenets of the program and a few definitional items that the SBA has given additional clarification on, and then also talk about the specific things that restaurants should be doing now in the next few days so that they're very, very up to speed in being able to quickly apply. And we'll actually talk about there are a few ways to apply, and I think that one way is the best way to apply if at all possible. And that should be looked at to see if that's a possibility for each of you. So if we can go to the next slide. Um, Basically, one can get a grant if it's an eating establishment that has experienced a pandemic-related revenue loss and is not permanently closed. They will qualify for a grant. And the SBA, in their guidance, has given some guidance as to what it is to be an eating establishment. And that's basically a business where the public or patrons assemble for the primary purpose of being served food and drink. And the SBA has said that to establish this requirement, your business must have at least 1/3 of their 2019 gross receipts from on-site sales of food and drink. And if you opened up in 2020 or have not yet opened up, that 1/3 test should have been contemplated in your business plan. And we can speak a little bit more about your business plan and how you might be able to meet this requirement um, or be able to substantiate this requirement in a bit. On-site sales, they've also said, means the sale of beverages and food that were consumed on the applicant's premise were purchased at the applicant's premise to go or were purchased online and picked up from the grant applicant's premises or were delivered directly to a consumer for use. So it's not for wholesale eating companies. Um, and they've made clear that the use of the term gross receipts, which is very similar to all the SBA programs, is essentially anywhere, all revenues in whatever form was been received in accordance with your accounting method from whatever source, including sales for products and services, even interest, dividends, royalties, and the only thing that's not really excluded are net capital gains and losses. And for the most part, gross receipt information, which is a primary fact that you need to determine a number of things, can be found basically on your federal income tax returns. Um, and I think that the SBA has also indicated specifically that caterers and bakeries can qualify as an eating establishment. And so they're sort of added to the mix of what was hardwired into the contract of restaurants, food stands, food trucks, bars, saloons, lounges, snacks and non-alcoholic beverage bars, brew pubs, breweries, inns, winery, and distilleries. One of the interesting things that they've done that As you can see, for a restaurant or a food stand, substantially all your revenue will be derived from sale of food or drink at the premises. For certain classifications, the SBA is requiring that you submit with your application basically proof that you satisfy the 33% gross receipts tests. And those are in respect of bakeries, brew pubs, tasting rooms and tap rooms, breweries and microbreweries, wineries and distilleries. Um, and one of the interesting things that they're requiring for an inn, which I think may be somewhat troublesome, is, inns often involve bed and breakfast and revenue being derived from things other than the sale of food and beverage. Um, and an inn must also provide documentation to satisfy um, that its on-site sales of food and beverages to the public are at least 1/3 of its gross receipts for the applicable period of time. Um, if you're able to be classified as something other than those specific eating establishments, the SBA will assume that you satisfy the 1/3 test. But I'm advising clients that even if it's assumed that you will satisfy that test, you should get together the proof of that in terms of looking at your accounting records so that if the SBA should come asking for that information, you can easily provide it. And indeed, one of the good faith certificates that you'll be making representation to the SBA in connection with your grant award application is that under the rules that you qualify to receive this grant under the rules in effect at the time the application is submitted. So even though they're not asking any other types of eating establishments to submit proof of the satisfaction that 1/3 of their sales are developed from food and beverage sales on site, I think it's wise to make sure that you have that in case you're asked for it. And there have been a little bit more meat on the bone with respect to what the disqualifying circumstances may be, so that even if you are an eating establishment, that you won't be able to apply for or obtain a grant, a restaurant revitalization fund grant. And as set forth in the statute, one is if you operate at more than 20 locations as of March 13th, 2020, essentially the onset of the pandemic. And surprisingly, the SBA has not given any more detail as to what an affiliate business is. So for all intents and purposes, I'm quite surprised, but the way I see the language reading is each eating establishment only counts those other eating establishments that are essentially a subsidiary that is controlled by the eating establishment. It doesn't cover above the eating establishment applicant. So if one individual might own two or three different um, organizations, each of which conducts their own eating establishment business, each of those eating establishments are subject only to the 20 location test based on whether or not there are other locations for that eating establishment and its subsidiaries, which are typically wholly owned or majority owned. So in that sense, I think that is somewhat different from how the SBA treats in many other programs the definition of affiliate status, and they basically hewed to the express language of the statute, which I think might be helpful to a number of eating establishments that may be owned by a sort of controlling group. Um, Also, you'll be disqualified if you've applied for a shuttered venue operators grant. And we can talk about this a little bit, although it's not the topic. I think that generally speaking, you would likely not qualify. It would be harder to qualify for both of these grants. So if you qualify for a restaurant revitalization grant, I would suggest that you go that route. You'll likely get more money. And also, I think it's a lot easier to apply for and demonstrate that you're qualified for any one of a number of reasons, the least of which is the need for a DUNS number and to basically process your information, your establishment through the government SAM system that is somewhat cumbersome and can often take more than a week. So the SBA has given a little bit more information of what a pandemic-related revenue loss is, and essentially just the amount by which your gross receipts for 2019 is greater than your receipts for 2020. So basically, it's a snapshot of those two numbers pre-pandemic and the 2020 effect of the pandemic on your sales. And I suspect that there's significant impactment to revenues for many of the members of on this call. And I think that that should enable you to demonstrate that you had such a loss. There are also, if you've not been in business for the entire year of 2019, it's basically you take the average monthly gross receipts for each year and then multiply it by 12, which is again directly as set forth in the statute enacting the Restaurant Revitalization Fund. And the SBA has said in their guidebook that they will allow an eating establishment that didn't operate for 2019 to choose between what I'll call the average monthly gross receipts difference between 2019 and 2020, and also the formula that basically treats the eating establishment as having opened on January 1, 2020, and counting basically their payroll costs through March 10th, 2021, which was the date in which the Restaurant Revitalization Fund program was enacted by the government. And also, if you are an eating establishment which has not yet begun its business at the time of the grant application, you can, to the extent that you've incurred eligible expenses, which we'll talk about a little bit more, you can you can demonstrate a pandemic-related revenue loss by those incurred expenses. So I think that generally speaking, restaurants and eating establishments should be able to establish that they experienced a pandemic-related revenue loss, and you would look primarily to your books and records, your cash receipts and cash disbursements, or any other system internally generated that you would be able to quantify revenues. And generally speaking, the amount of the grant is basically your pandemic-related revenue loss reduced by Paycheck Protection Program loans and other SBA economic injury disaster loans and other state and local grants, including those authorized through the CARES Act. Again, that really hasn't changed from the statute, and nor has the fact that the grant amount can exceed $5 million per location or $10 million in the aggregate, right? So again, just to come back a minute to this affiliate status, if one individual has a bunch of eating establishments that he or she owns, that will each eating establishment pod, its corporate organization, will stand on its own and can get up to $10 million in total, or 5 million per location. So if you had two locations, and you're allowed 5 of these. So if you had 5 separate corporate entities that operated different restaurants, in different locations, you get the sort of like the full, you don't get cut off because you're under common ownership. One of the things that was clarified by the SBA's guidance is you count your locations based upon a location is a fixed permanent structure at which sales are made. That counts as a single location. However, if you're a caterer that generates sales at a non-permanent structure, such as maybe you have 5 food stands, in that case, you're only deemed to have one location, and that's where the business is headquartered. So the location has to be a fixed permanent structure, as opposed to a food cart or food truck or any other non-permanent structure. Um, so the next thing in terms of what, now that you've established that you can qualify to get a grant because you've demonstrated that you have a pandemic revenue loss, um, and
Howard,
you're,
Howard, good morning. I have one question that about the eligible, I guess, entities. It, I know we talked about it a couple weeks ago, but what about nonprofits such as Moose Lodges? Can they apply, or it depends?
yeah, so the answer is nonprofits are not eligible for this benefit. So not eligible to apply. I think the issue comes if, and a lot of this is triggered by your tax ID number. So if a nonprofit, bear with me one second, has a separate entity that conducts itself for business. Basically, it's a business, and somehow I believe, although I'm not an expert in taxation in this area, I believe that that business unrelated to the purpose of the nonprofit is subject to tax. You may be able to qualify. But if the entity that's applying is itself a nonprofit, the SBA has taken the position that they are not eligible to apply. Okay,
Thank you.
sure. So one thing that the new SBA guidance has done is the SBA has taken the statute's authority to extend the period of time during which you can spend your grant money, the cover period. So basically, your grant award can be used for qualified expenses, which we'll get into in a moment, that have been incurred during the period February 15th, 2020, all the way through March 11th, 2023, or if it so happens that the business closes permanently earlier than March 11th, 2023, on the date that the business permanently closed. So in as originally written, if the SBA sort of let it alone, it would only cover expenses, I believe, through 12/31/2021. But now there's an extra year to spend these funds, which I think is a very good thing. And indeed, that was the outside date, March 11th, 2023, that the statute says the SBA could choose. So they're basically taking the most aggressive um, duration to help restaurants and related companies. So in terms of what you can use your grant for, the list is essentially what was set forth in the statute with a few clarifications. And they include payroll costs, just like it's defined in the PPP program, payments on any business mortgage obligation, but not prepayments thereon. Same thing for rent. And they've also added business debt service. So if you have other kinds of debt, um, things that you put on a credit card, they can be paid, but they're not supposed to be prepaid. So if you have additional debt, but it's not due until a later date, and again, that gives you a wide berth to cover in terms of the covered period, all the way through the first quarter of 2023. You can now include that as a permitted expense. Business utility payments, gas, electricity, internet access, or any other utility used in the ordinary course of business, for which service began by March 11th, 2021, which is the date that the Restaurant Revitalization Fund was enacted. Business maintenance costs, including maintenance of walls, floors, deck surfaces, furniture, fixtures, and equipment, construction costs of outdoor seating, business supplies, business food and beverage expenses, including raw materials in the case of microbreweries or other distilleries. And also the SBA has provided some helpful guidance on covered supplier costs, which basically is an expenditure to a supplier that are essential to the operations of the entity at the time in which the expenditure is made and made pursuant to a contract or purchase order in effect at any time before the receipt of the grant award. Or, most importantly, with respect to perishable goods, a contract or order or purchase order in effect at any time before the covered period. And I think there were a number of questions that we fielded about this program from restaurants dealing with the fact that they very often buy supplies of perishables on a on an as need basis, and there may not be a purchase order in place. And we sort of counseled the people who raised this question that we think that that should qualify because it's in the ordinary course of the restaurant's business, and the SBA has confirmed that in connection with the guidance they provided over the weekend. In addition, you can also use the grant funds for business operating expenses. Any business expense incurred during normal business operations that are necessary or mandatory for the business. And I think that that potentially raises, a good bucket that restaurants who are fortunate enough, eating establishments that are fortunate enough to get one of these grants can easily spend these monies in an appropriate way. To the extent that a grant recipient doesn't use all the proceeds by the end of March 11th, 2023, they're supposed to be returned to the SBA. And the SBA has outlined a procedure where grant recipients at the end of each calendar year is going to report how they've used the funds, what they've used it for based on a category basis, the 12 or 13 categories listed. And it's possible that the SBA notes that they may request supplemental documentation to validate the use of the funds. I might point out that the statute creating the Restaurant Revitalization Fund program has a bunch of audit requirements that the SBA is supposed to employ. And indeed, my recollection is, I don't have it before me, that was supposed to be put into place very, very quickly. It may be as early as like mid-May. And I'm not sure if the SBA is going to actually make that date, or that date will slide as many other dates have slid in dealing with a number of the programs the SBA has worked with. But there will be some kind of audit of the program. And so it's really important that you keep records of these materials supporting what you've done with the proceeds and how you qualified for a period of at least 3 or 4 years. It's sort of, I sort of think of the grant programs, both the Restaurant Revitalization Program and the Shuttered Venue Operators Program, as the flip of a PPP, because PPP was structured, we'll give you a loan, but it's really not a loan. It'll become a grant if you do X, Y, and Z. Here, it's the opposite. It's a grant now, and so long as you don't commit a foul, you can spend the money. You must spend all the money in an appropriate way. No harm, no foul, no problem. If you spend the money in ways that are not allowed, the SBA may very well come after you for a return of those proceeds. So I do think it's very important that you keep good records of all this information and backup. The SBA, like most government agencies, are not the swiftest in moving in terms of making decisions, as many of you may have experienced with PPP and the loan forgiveness process. But eventually, they do get around to it. So I think it's very, very important to make sure that you document how you qualify and how you spend the money, even if it's not necessarily requested of you right away in connection with either your application for the proceeds for the the grant, or in the case of once you've had your grant, providing analysis of how you spent the money. So in terms of, I wanted to talk briefly about set-asides and priorities. Because of the fact that I'll say there's going to be a run on the bank or a run on the SBA, it's really important if you're an eating establishment that has suffered a pandemic revenue loss to make sure to see if you qualify under one of these sides or priorities, because I think that will enhance your ability to get at a window and actually have the SBA act on your application, as opposed to languishing while they consider other applications. So in terms of set-asides, 5 billion has been set aside for those applicants whose gross revenues for 2019 are not more than $500,000, 4 billion for applicants with 2019 gross receipts between 500,000 and 1.5 million, and 500 million, which seems like a very small sum based on the billion that I've mentioned before, are set aside for applicants whose gross receipts for 2019 are not more than $50,000. Interestingly, the SBA took the time to notify us that anyone who's requesting or qualifies for only $1,000 or less than $1,000, they won't process that application because they don't think it's a useful exercise of their time. Although I suspect that even the smallest eating establishments that have gross revenue pre-pandemic of $50,000 would have generated substantial losses in excess of that because of the pandemic. Um, the people who get to the head of the line, in addition to these set-asides who have priorities, are small business concerns, where at least that are owned 51% or more and controlled by individuals who are women, veterans, and socially and economically disadvantaged individuals, which according to a list includes Black Americans, Hispanic Americans, Native Americans, including Alaska Natives, Native Hawaiians, Asian Pacific Americans, and subcontinent Asian Americans. So if you're a business that's owned and controlled by women or one of the veterans, or one of these groups, it's very important that you see if you satisfy the small business concern test, and that your revenues fall within the parameters for you, if they fall in the various parameters for the set-asides. Um, and I wanted to point out, because some of you are somewhat familiar with the small business concern concept in PPP from Paycheck Protection Program, this doesn't have special treatment for restaurants, as you might have guessed, because essentially it's designed to assist eating establishments. So you actually have to look at the it's called the North American Industry Classification System, for the business that you're in. And quickly reviewing that, most eating establishments that qualify as a small business concern, their annual receipts can't exceed $8 million, except in the case of limited service restaurants, or what they call cafeteria or buffets, where in the case of limited service restaurants, you can have annual receipts of up to $12 million. And in the case of cafeterias, up to $30 million. So I think that if you can fall into the definition of a business concern and you're 51% owned by one of these prioritized groups, you should that should be one of the first calculations that you make, because you can essentially move to the head of the line. And what the SBA has said about the process is, once the fund becomes live, once the Restaurant Revitalization Fund it commences, and I assume that means after their 7-day test period, during the 21-day period, um, the first 21 days, grants will be awarded um, only to eligible institutions that are basically in the prioritized groups. And they're going to rely on a certification for that in the first instance, and they may retroactively review that. I suspect that they will. Um, but if you can fit in one of these categories, it means that the window opens up, and the way I understand it is all applications will be accepted, but they'll essentially be put on in a pile, and then that pile will be reviewed, and to the front of the list and will be these small business concerns and that are owned by a prioritized groups, and those applications will be processed first. And once the preferential 21-day period is ending, then they will do essentially on a first come, first served basis. And like I said at the beginning, since we're going to run out of, it's likely that the money is going to go very, very quickly. It's really imperative for you to be able to qualify, if at all possible, as one of these companies that can sort of be processed first, so that you have a much better chance of getting a grant amount and not being shut out. Um, the grant application, there's a sample that the SBA has issued, although they said that, and you can download it, and my alert that has the hyperlinks for a number of things, this being one of them. And the SBA says they're still working on it. So there likely will be changes, but I think that it's a very, very useful exercise to go through it and basically prepare to answer it, as assuming that it's adopted and enacted as is, that's what they're going to use. And in the application, an applicant must certify, among other things, that your business hasn't permanently closed, that current economic uncertainty makes this funding request necessary to support the ongoing or anticipated operations of the eating establishment. The applicant, together with its affiliates, does not own more than 20 locations, regardless of whether these locations do business under the same or different names, that you haven't applied for or received a shuttered venue operator grant, you're not a public company, you're eligible to receive the funding on the SBA rules in effect at the time the application is submitted. You're not engaged in any activity that is illegal under federal or state law, and to the extent feasible, that you'll purchase only American-made equipment and products. Also, interestingly, the application, the sample, requires the disclosure of the name, address, and tax ID number of any 20% owner of the eating establishment. Or if you don't have a single shareholder or owner that owns 20%, you're supposed to give a number of owners that equal up to 20%. I think this is somewhat curious, particularly since the SBA didn't try to be more expansive in the definition of affiliate to try to get at groups or eating establishments under common control. In addition, with your application, you have to you will need to submit documentation to support your calculation of your pandemic-related revenue loss. And there are forms that the SBA has provided. They look very much like forms that you fill out every year on your tax return. Um, and there's a worksheet, and information can generally be taken from various parts of your business tax returns that you file with the IRS, or bank statements, or if you haven't filed your tax return, what your draft tax return has, or externally or internally prepared financial statements, such as profit or loss statements, or point of sale reports, And there's also a IRS form 4506T, which you have to allows, I guess, the IRS to verify the tax information that you're reporting to the SBA. And then, as I mentioned in the beginning, if you're one of those eating establishments that fall into the group that you have to provide support that you satisfied the 33% test, they give you a couple of ideas of where you can pull that information together, but it can be from internally related sources, and that's something that if you certainly if you fall within one of those groups of eating establishment that must submit that documentation, you should gather that, and I would suggest that you gather it regardless, just so you have it. So one thing that's interesting in terms of operations of how this is going to work, there are three ways to apply for a grant. And the one way is destined for failure, and I would discourage people from using it, and that is basically to do it telephonically. But where I think that there's a really interesting idea that the SBA has come up with. They've identified what they're calling SBA restaurant partners, and they are basically technology companies that provide software and hardware and payment services to the restaurant industry to already, and they're partnering. The SBA is partnering with them, point of sale restaurant partners, and there's a link where you can find out directly from the SBA who is on that list and how you can contact them. And right now there are two or three entities. One is Square, the point of sale company, that it seems to me to be somewhat ubiquitous in terms of providing all sorts of hardware and services to all different kinds of retail businesses, including restaurants. And if you can work with them, if you already work with them, or I would suggest that is the best way of applying, because they will help you prepare and submit the application. I almost think of them as the bank in the triple P loan program, to the extent that may have been helpful. But if you're unable to hook up with one of those entities, and I suspect that the SBA will be adding more names as this gets rolled out, which is another reason why I think you may have the sufficient time to do what you need to do in terms of gathering this information, and my hunch that it's not going to open up tomorrow, let's say. But the other way that would work, and I think would be a good idea, is directly through the SBA. They've set up a portal, and hopefully it will work. I know they're trying to get out kinks in the portal that they set up for the shuttered venue grant program. So in terms of steps to take now, I would greatly encourage each of you to check out the SBA website. And there are ways to sign up so that the SBA emails alerts to you as additional information becomes available about the Restaurant Revitalization Fund. And I have that hyperlink, and I will coordinate with Dawn the best way to get that to each of you. Um, I would not rely on that. I would do it, but I wouldn't rely on it. And I would suggest that you have someone in your organization, if at all possible, check regularly with the SBA, go to the site and see if there's anything else that has come out, because I wouldn't just wait and trust the SBA to provide that information to you by email. So I would at least like 2 or 3 times a day, maybe morning, noon, and night, just check. There's a hyperlink for that as well, where the SBA will post on its website updates. I think it's really important for you to make sure, particularly if you're in one of the affected classes of eating establishments, that you can document your satisfying the 33% of your gross receipts or from on-site sales of food and drink, and you basically have that ready to either attach to your application, or if you're not in that class, that you have it set aside so that if they come a calling sometime in the future, perhaps after you spent your money and ask for proof of that, you can provide it. And I think that the other thing that should be done is very, very quickly is see if there's any way that you can qualify as being in one of these priority groups to get special treatment, either in terms of getting to the SBA to process your claims first, or if you're of a small size, that you might be able to have a go at the various almost $10 billion that have been segregated for particular small size eating establishments. And then I would also regularly, but maybe not every day, monitor the hyperlink that tells you more information about the SBA restaurant partners, because that is, I think, the best way to increase your chances of being one of the lucky people, establishments, in getting a crack at getting the 28.6 billion, because everyone thinks that they're going to run out of money very, very quickly. And to the extent that you have a relationship or can start a relationship with one of these um, hardware, software companies, I would try to do so. And I'd also complete a draft of the application as it exists. And there's also a useful restaurant revitalization funding guide that the SBA puts out. And I must say, they seem to update it fairly regularly. I don't know, daily or and they don't even tell you necessarily. It's not easy to figure out what they've added or subtracted, which is unfortunate. And I do think, although there are aspects of this process and this application that are really straightforward and easy to figure out and conducive to owners doing it themselves, you may very well benefit from speaking to your accountant or other professional advisor in pulling together the information and making these determinations. I must say that unlike the shuttered venue program and materials I've looked at, which I think are much more complicated, I think this would be a very useful exercise to maximize your chances of getting an application filled out. And the SBA mentioned that once you submit an application, they're not going to allow you to make changes to it. And um, you don't want it, once you're in the queue, you don't want to get out of the queue, even if they would. You want your application to be processed. And so basically it has its best foot forward. There's one bite at the apple. As the case in most grant programs, there isn't an appeal process. So it's really important that you get to the window as quickly as possible. You have all your materials submitted and you've done everything correctly. And to hopefully you're in one of these priority groups, and that will enhance your chances of getting a actual grant. And it could be the case, I haven't heard anything about this, that to the extent that these monies are depleted so quickly, you never know what Congress will do, but I would never count on there being agreement to extend or refinance some of these programs.
Very
That
helpful, Howard. I have a couple questions here, actually more than a couple. Socially and economically disadvantaged small businesses, does it fit for rural small businesses?
So, that it's interesting. My in looking at all these terms are not made out of thin air. There's laws and systems in place. So the economically disadvantaged, and I looked at this, there's hyperlinks within the guide. It looks as if that you actually have to you have to submit or prove that you've been disadvantaged, which is very, very different from social disadvantaged, where if you fit into a particular classification, then you're deemed to be um, the to meet the priority group. So I I I I I don't have specific experience in dealing with this for those economically disadvantaged, but the regulatory framework seemed to suggest that you need to submit documentation to support that disadvantagedness. And so it seemed to me to be a somewhat laborious process. Um, but it's something that, if you certainly, if you qualify as a small business concern, that maybe one would look into that further. But I suspect that it might be very difficult to pull together in the time frame to be able to support that determination.
Got it. And then last time, Howard, we talked about the timing of when a restaurant opened. There's an example here that they're a brewery who didn't actually serve customers until July 2020, but they invested hundreds of dollars, going all the way back to 2019. They delayed the opening a few months, but I believe they said they would lose more money by not opening, and so they opened. We didn't make a profit all of 2020, but I believe you said in the last call that even a restaurant that opened in October would still be eligible to apply for the loan. So this,
Yes.
yes,
That's correct. So just to be clear, if you opened your eating establishment anytime beginning after January 1, 2020, and ending when the the Restaurant Revitalization Fund has been enacted, which was March 10th or March 11th of 2021, last month. If you opened at any time during that 1 year and 3 month period, the amount of payroll costs that you expended during that period, which is essentially what was defined by PPP, so it's fairly inclusive, minus any gross receipts received, is what your pandemic related revenue loss is. And you should be entitled to get that as a grant if you're fortunate enough to get to the head of the line and have your application processed. And I think that they'll reduce from that any triple P loans or other sort of emergency disaster loans that you receive from the SBA. But you can establish a pandemic related revenue loss, even if you opened post pandemic, even if you opened, February 15th of 2021.
got it. And then what about, according to the sample calculation sheet, if the number of locations is 1, is 5,000 the maximum that can be received?
I don't know where. I'd have to get back to you in that. When I looked at the worksheets, I wasn't focused on, and I thought that the the only maximum is 5 million. So I don't recall seeing on the worksheet that if you have 5 locations, you're limited to a certain number. I did see where the SBA went out of their way to say they're not going to process any application that seeks less than $1,000.
Gotcha. Another question that came up, so we'll get back to folks on that last question. We received the PPP2 in 2021. Should we deduct that PP2 when we calculate the fund amount?
Yes.
Okay. And then I already asked that one. Is it possible to convert to a 51% female-owned business now?
No. I think the answer is no, because I think that the whole idea is that you had to be that. I think there may even be something in the guide that says that. I think the whole idea is that they don't want you to start doing things like that now to get to the front of the line.
Gotcha. Do you know if the grant will be something we can get through the bank like we did the PPP loan, or is it something we must apply directly through I think you said through the SBA or through those small technology companies?
Yeah, so unfortunately, I think, even though a lot of people think the banks were a fiasco, um, both of these grant programs are administered primarily by the SBA, so you don't have the banks, are not involved. And the only glimmer of hope that I see, because I think generally speaking, the banks could have been a point of a lot of help, is to hook up with Square or any other of these technology companies. And I think that the thought is that these are companies that a lot of restaurants and eating establishments may already be working with. And hopefully they'll add more than the 3 or 4 I saw on the list late last night.
And we could add, Sam's going to introduce the little toolkit we put together, but we could add some of that to that as well, Howard. Here's another question. Is there an amount or percentage of revenue loss required to qualify?
No.
Okay. And would state sales tax return filings be an acceptable form of sales reduction evidence?
I think it should work. I think that should work. I'd have to look at the form, but I think it would.
And another question came through. If we have three
Good
partners,
question.
if we have three partners equal shares and one is a female and one is a veteran, would we qualify for the early submission date?
Yes. So that's an excellent question. You can combine priorities, if you will, so that is an exact example that the SBA mentions as being appropriate. So if you have two women that own 40% and a veteran who owns 15%, you should be able to get to the front of the window.
Thank you. I think that's the last question.
Okay, I think that Dawn, offline, I'd like to speak with you just about how best to get the information contained in the materials I discussed today to the participants on this call. And I want to see if I can, effectuate that today or
Yep,
as soon as possible.
we can do that. Absolutely.
Okay.
Okay, and we could add to, so what you're seeing on the screen, everyone, is a restaurant revitalization plan toolkit. It's a guide to help you. It has a lot of what Howard went over today in there. And then we'll add some of the links that he spoke about as well in here so that you have it. And we'll send that to everybody on the call today. We encourage you to take a look at it. It'll help you as you maneuver your way through this new funding. And then finally, just a reminder that Marketing Services is here to be able to help. Our concierge service is available to all Cisco customers, and we can help with anything from social media consulting, helping you with social media posts, helping you with posters, banners, shouting from the rooftops that you're open now, hopefully. We can help you with contactless menus and more. So just reach out to your sales consultant or go to our Restaurant Rising site and just make a request to have our services. And that concludes our session today. Howard, thank you so much for joining us. We really, really